All righty, everyone. Welcome back. Annuity Producers, video, vlog, blog. I don't know. We just record content, put it out here, help you all out. Today, I'm sitting here with my good friend, Mr. John Terry. He helps run Legacy. And then they have some amazing products, great options out there. Many of you hopefully have heard of Legacy, but if you haven't, he's going to share a little bit about what they're up to and what exactly they are. Because there's some misconceptions out there. Are they an IMO? Are they a carrier? What are they? They're a very unique industry hybrid. They're also going to be coming to our event. They're one of the main sponsors here at Annuity Producers, and we have a great working relationship with them. And then they're also going to share a little bit about some of the biggest objections that we get in selling annuities. A lot of us sell annuities for the purposes of lifetime income, hence the original value of an annuity, and the definition of annuity is income. But we have objections. And one of the biggest objections that we get is, if I don't use this, it's going to reduce my death benefit. If I don't use this and I change my mind or I need to take withdrawals out, I'm not going to have much account value appreciation. The caps and the pars are lower. And also there's that pesky income rider fee. So they have a very unique way to help overcome those objections. And we're going to learn all about it today. So without further ado, I don't want to take all the time up. Mr. John Terry, go ahead and take the floor.
Absolutely. Roy, thank you very much. And I am looking forward to being at your event, having an opportunity to share some insights with the audience while I'm there. So going to be a fun event. It'll be my second time to be there. And you put on one of the best events in the industry. So kudos to you for what you're doing. Yeah, for those of you that haven't heard of Legacy, we are a 33, almost 34-year-old product design company. Many people, as Roy said, think of us as an IMO or a carrier. We're neither. About 33 years ago, when fixed indexed annuities first showed up in the marketplace, nobody knew what they were. Carriers didn't know how to build those. So Legacy came to the table with an incredible team of product developers and said, we will help major insurance companies build their fixed indexed annuity products. And then together, we'll co-market those through the independent advisor space and give an opportunity for financial professionals to sell those products. Well, fast forward 33 years later, we're still the only independent company, not affiliated with a carrier, not affiliated with an IMO, still the only independent company doing that in the marketplace. We currently work with 4 different carriers. So one contract, access to 4 carriers, multiple products. All of our products are uniquely designed to each solve a different money problem. So that's the Legacy story, Roy, in 60 seconds or less.
I love it. That's a great little elevator pitch for Legacy. What's really cool is you guys give excellent pre-case design work, marketing support. And a lot of these carriers, sometimes you're on hold forever, or you get the new rep on the phone. I mean, I think I started working with y'all, I don't know, nearly 10 years ago when I first got a contract. And like some of the same folks that I first started speaking with are still there today. It's awesome to have that tenure, which is hard to find in this industry. And the knowledge that these reps have, they can really help you get a case across the line. You even have a suitability department there that helps with everything. So there's an immense amount of support there. And I really enjoy the fact that you're not just pushing one single product or one single company, that you're neutral. You're like, hey, look, if there's a carrier that's going to work with us, they're going to be able to let our team work with them to design a phenomenal product that's different than anywhere else, then yes, we'll host it. But you're not married to one particular company. And that's what's cool when you call the sales desk, is I can call in there and be like, look, here's the client situation. Should I go with Americo or should I go with Emeritus? Like, who's going to be the best for that? You have a little micro product suite that I can get non-biased advice on, which is great, because even at some IMOs and FMOs, unfortunately, they're going to push the company that could be the highest compensation company, where we don't have that challenge with Legacy. It's very open, transparent, and the team there is just absolutely amazing. Something else I wanted everyone to learn about you, if you don't mind sharing, how cool your background is. Not the background behind Zoom, your actual fighting background in the past.
Oh, yeah, absolutely.
Yeah.
Well, I've been in this industry since 1987 in terms of serving the financial services industry, but I've been in the martial arts industry even longer, Roy. I started in the martial arts at the age of 13. Fast forward now, 53 years later, I have black belts in multiple systems. I'm a 3-time Martial Arts Hall of Fame inductee. So the standing joke at my house is I punch, kick, and kill people for fun, and I've taught all 3 of my daughters to do the very same thing.
Yeah. Or also, don't piss off dad. That's great. I remember I got to meet your daughter at another insurance conference that we went to. That's really cool that your kids are into it. I got like a white belt one time. I was going for the yellow belt. I was a little kid. I was like, I don't want to do this anymore. My parents didn't make me keep doing it, but I should have stuck with it. That would have been really, really cool. So maybe one
You
day
can
we'll go
always
back.
go back and pick it up. My dad was my
That's true.
oldest student at 70, and he earned his black
Wow.
belt at 75.
Oh, 5 years, huh? That's not okay. Yeah. And you see, you guys, if you notice, all of you that listen, whether you're a consumer or an agent, because we put this on YouTube and all the other platforms and channels, we have a variety of different people here. And the majority of people that we're actually working with, they've been in this business a very long time. Like I was born in 1987, okay? He's been doing this like as long as I've been alive, which is amazing because we need that type of advice. Okay, you can have the smartest person in the room that's been in the industry for say 3 years, but that doesn't compare to the immense amount of experience. And that type of experience, John can go anywhere he wants, but he's chosen legacy, and there's a lot of reasons why he has decided to plant his feet here and to help grow and scale the company. So speaking of that, maybe you can share a little bit about some of these innovative product designs that are helping agents and consumers overcome some of these objections regarding the income space.
Yeah, Roy, I'm glad you brought that up because that's a big issue that I'm having conversations with as I'm traveling across the country and speaking at different events where I'm getting an opportunity to talk to individual financial professionals and the clients that they serve.
Mm.
And a continual theme that I'm hearing are people's, particularly those between the ages of 45 and 55. They've got an opportunity to move to another job. They've got a 401k that they're either going to leave behind or they got to do something with. And many of them, as they're thinking about that in the future, they want the idea of maybe some type of income stream in the future.
Mm.
But for them to be able to put that product in an income focused product today and pay an annual fee for that, all that does is erode the account value. And we've got a
Right.
lot of other people that are getting 60, 65, 70 years of age. They're getting ready to retire. They're doing the math and they say, I like the idea of guaranteed income, but I don't want to pay a fee. Are there options available in the marketplace,
Mm.
especially when their needs may change in the future? So a couple of solutions that we're looking at right now with two products in particular, and I'll start with one, the EclipseMark product, which is underwritten by the Standard. That product offers rates and caps, including a fixed rate that's financially guaranteed for up to 10 years. So you never have
Wow.
to apologize for the par rates, the cap rates, the fixed rate, which is currently at 4% at the time of this recording on the 10-year version of the product. So it's an
Wow.
opportunity for someone that's, getting ready to retire to
Mm.
lock in and know exactly what their upside opportunity can be each and every year for the next 10 years if they choose the 10-year version of the product and not have to worry about that awkward renewal rate conversation.
Yeah.
But the other thing I like about that product is the fact that it comes with 15% liquidity starting in the second year. So think about the people that are 65, 66 years of age, and they're having the discussion now, do I claim Social Security before my full retirement age and take a haircut? Or do I wait till age 67, which would be my retirement age for my full retirement benefits, and I can get that full benefit I paid for my entire working career? Or if
Mm.
I wait to age 70, I can get those deferral credits. But what if I need money to fill the gap in the interim to be able to let that Social Security paycheck maximize so it works good for me, it worked good for my surviving spouse? The ability to pull up to 15% each year
Dude.
out of an annuity is huge. And
Yeah.
it gives you the opportunity. If we go back to one of Tom Hagen's going to be one of the speakers at your event, Tom
Yeah.
talks about the go-go years in his book that, he's written, Paychecks and Playchecks. And in those first early years of retirement, people want to go. They want to do things and do the things they've always did. My parents, when they retired, they said, what do we do with the money we've saved? I said, Dad, go spend it and have fun. Well, for the next 5 years, I'd get pictures of my dad at Destin Beach or at different parts of the country, and he'd send me a picture from his smartphone with a little caption underneath it, I'm spending your inheritance. I hope that's okay.
I
It
love
became
it.
the standing joke that dad go spend all your money. But now my dad at 90, my mom at 87, they're in an
Wow.
assisted living facility. They can't do that anymore. But the ability for mom and dad, if they needed it, to be able to say, I need to take a little bit more out now. And then I can maximize that Social Security benefit. And then maybe I only need 2, 3, 4% to supplement today. But
Mm.
as inflation kicks in the future, I could take that 3 or 4% to 5 or 6 or 7 as I need it. It gives the client flexibility. It gives them control. And what I like to see, it gives them the ability to customize their income on an annual basis. And because
Yeah.
they're in an accumulation focused product, higher rates, higher caps, better growth opportunity long term. So as money's going out the back door, you got money coming in the front door through the opportunity for these products to continue to grow. It's an interesting solution. I think people are overlooking or ignoring, and it works in that turning 65 market, but especially works in that younger marketplace, 45, 50, 55, that they need the opportunity to grow that wealth. But if their situation changes and they need to access money, they've still got up to 15% liquidity every single year.
Yeah, that's amazing. I mean, that's a lot of these products that are out there now. If they have some guaranteed cap and par rates, or they have a good high guaranteed fixed rate, you're going to give up something. And usually it's liquidity, because that's costly to build into a product design. And a lot of them will start off at 5%, they'll be cumulative up, but they'll only be 5%, or the traditional just regular 10% after the first year. So having 15, that's very impressive to me. Now, when it comes to the income side, are there options there with this product, or is it just like one level flat income? Can you do increasing? Can the income increase based on index participation? Are there some choices there for the clients?
Well, with the EclipseMark product, it is an accumulation product, so there is no income rider on that product. Right. However, we do have a sister product with Emeritus, and we have a brand new carrier that's going to be coming to market in September that's also going to be offer a guaranteed income product as well as a performance-driven income product. But with those, you've got an opportunity for level income or increasing income, but there's going to be a fee associated with those. So we do have those solutions available, but the EclipseMark solution I was talking about, and we can do something similar with the OptiMark product, our bonus version product that we've got available with Americo, do something similar there, but those are not contractually guaranteed. Those are withdrawal-based opportunities.
Gotcha. Yeah. Okay, that's awesome, because if you look at the industry statistics on how many people actually use income riders, it's relatively low, surprisingly. A lot of our clients, they're going to turn it on, at least on average, about 50% of our clients turn on within 3 years. But there's still a huge part, especially when you're talking about somebody who's 65. That may sound old, but not really. I mean, especially if there's a 30-year time horizon, right? I mean, that's a long time, and they may not actually need that, or they don't want the taxes. Like what we find is a lot of people, they'll buy an income product either from us or just from another group, and then 5 years on a renewal, we visit like, you know what, I don't think we're actually going to even use this. We wanted to. Can we move it to something without a fee or remove the fee and get better growth and flexibility? Sure. And this product that you're talking about is perfect, because it's like, hey, look, you can have good growth out of this. You can have 15% access a year, which is phenomenal. And it could, it's not going to give you the guaranteed lifetime income check, but if you're not intending on using it and you want to balance your tax strategy out, then yeah, a withdrawal strategy is going to be far more advantageous for you than that guaranteed taxable amount that's coming out.
Yeah, and you've got the guaranteed rates and caps, so you can do some estimates based upon historical performance in terms of what you think your growth is going to be. Right. So you can actually work the math to be able to figure out how much can I afford to withdraw on an annual basis and keep that product intact or minimize the drawdown of that product over time. So a lot of flexibility and a lot of control that with an income rider, if you turn it on, you're going to get what you get. And that's going to, over time, eat up the accumulation value of the account. And you got an opportunity to leave nothing to your kids or your grandkids when you're gone. This gives you more options and more solutions that for some people may work. It's not for everybody. It's interesting. I saw a planned study survey this week that 95% of those not yet retired would like to have a guaranteed income solution available to them. But what you and I have seen over the years is even the people that say they want them, they don't always use them. So why pay for something you're not going to use? And if your situation changes in the future, you could always move to a guaranteed income solution if that's what you need down the road. So again, you've still got options. So why not keep all your options on the table, but maximize your growth with an opportunity to get access to the money if you need it?
Yeah, totally. And then there's also annuitization features on most growth products. Like worst case scenario, if you actually had to have it, especially if it's non-qualified money, then you get an exclusion ratio. But you can annuitize it, right? And I know there's some companies that let you parse that out. But with this EclipseMark product, you can actually turn on an annuitization feature, let's say in 7 years, if you really wanted to, correct?
As far as I know, yes, sir. Yep.
Yeah. So, I mean, that's what's cool about these two. And that's what we encourage agents to do, is like always look at the annuitization schedule. Not that somebody's going to buy a growth annuity just to annuitize it in the future, but it's always a backup option. Like we've had clients say, I just need income absolutely right now, right away, because maybe they're trying to qualify for a loan. Maybe they need the income for some other reason, and they just the withdrawal sequence is not going to help them. At least there's an annuitization feature there. Or if they're in a bind, like we've seen this happen before, is like they need access to money. Like I literally just yesterday, if I need to help this client out, but they only get 10% access. They were short. They were short by like 3% of the account value. If I had them in that EclipseMark product, it would have been no problem. I'd say you get 15% out. But the market value adjustment and the surrender charge, it created a loss. I was like, I don't know. You can, but why would you want to lose it? Why don't you just take 10% out and try to scrounge up the rest, you know?
Yeah,
But
or think about the client that's got enough income for today, but they're concerned about income tomorrow and the impact of inflation. They're
sure.
65, they drop it in a 10-year annuity at age 75 when they're probably going to need more money. Now they've got options. They could take distributions if they need it, or if they want another guaranteed income stream, then you move that accumulation value into an income annuity, turn income on immediately, and
Yeah.
there you go. You've got an opportunity to have the best of both worlds.
Yeah, no, I love that. That's awesome. Especially that withdrawal feature too, because we will use that a lot for RMD strategies. So I'll give you everyone a sales idea here. Like let's say that they have 300,000 or 500,000. Let's just say 500,000, easy number, and their RMD amount at the applicable age, say 73 or 75, depending on what year they were born. Let's say it's going to be 4% of the account value. We need to calculate kind of like an estimated return of what that balance is going to grow into. So let's say that 500 grows into like 600,000. Okay, it's conservatively. Now they have to take out close to 4%. It's like, all right, they had to withdraw 20,000. Do you want to do it from a managed account that goes up and down, or do you want to take it from this little bucket of an annuity and you have the flexibility? Maybe you only need to take 5% out of it. Maybe you need to take 10. Maybe you need to take 15% out because the growth is so high. So I could see this being very well positioned for those clients that are not necessarily seeking guaranteed income, but rather just an RMD strategy alone.
Right.
It's the best money to pull from is the money. If you're going to be forced to take an RMD out by the government, you might as well have it where it's guaranteed because RMDs are based on the prior year value. So in December 31st, 2026, for example, things are really high. And then let's say in 2027, and 2028, the following year, it drops. Your RMD is based on the prior year's value. Well, I wouldn't want to withdraw from a depleting account. I'd rather take from the annuity, the safe bucket, and fulfill the RMD and let my other investments grow and appreciate.
Absolutely. Yeah.
Yeah, I could see that being really well with the RMD strategy. But just overall growth, because that's, if you think about it, if annuities had zero surrender charges and they were 100% liquid with all the great features, they'd be way easier to sell. That's one of the biggest objections. My money is locked up, it's tied up,
Yeah.
I can't access it. And my biggest thing is like, do you feel that you're going to need more than 15% of what you put in here? Because if that's the case, you shouldn't buy it.
Right.
Most people are only going to take 3 or 4%, but at least you
Yeah.
have that option to bump it up.
Right. And another strategy we're talking about with this product a lot is the fact that you got a 4% fixed rate on the 10-year version of the product. So
Yeah.
think about that. If I took 25% and I allocated that to the fixed bucket and I put the rest of the money in the indexing strategies, I've got a guarantee of 1%. Regardless if the market goes up, down, or sideways, as a
Yeah.
client, I would never have a zero as a hero worry. I would always be better than
Right.
zero as your hero with one. There's another strategy inside that EclipseMark product called the dual growth strategy. Guarantees 2 with an upside of 5.5. So the upside is limited, but again, if a client's conservative and they want to make sure they've got some return on their money every single year, they
Right.
can put some money into that dual growth strategy, lock in a 2% interest rate guarantee with an indexing upside to 5.5. So built into this product are some very unique crediting strategies that give you an opportunity to structure it right to make money when the market's going up, but also to protect yourself when the market's going down, because indexing strategies work great when the market's up. But when the market's down, you don't lose anything, but you don't gain anything. Well, what if you could
Right.
gain 1% or 2% even in a down market?
Yeah.
That's some of the unique solutions we bring to the table with the products we design.
Another great idea I have with that product too. Now, let's say that like 5 years has gone by. I can then get out of some of those index strategies if I chose to and go into the fixed bucket,
Absolutely.
correct?
That
So
is
the
correct.
value there, a lot of people think, oh, why it's only 4%. I was like, hello, just 6 years ago, the banks were giving you virtually zero. Like 4% could be the deal of a freaking lifetime. So while things are hot, participate in these indices, try to get as much interest as possible. If things get choppy or you just want to get more of a secure rate, getting the guaranteed 4%. Imagine if you had a guaranteed 4% in 2019, 2020, 2021, 2022. That would have been the deal of a lifetime. Guaranteed 4%, that's awesome. So now they have an option to swing back into there. And if you remind people like, hey, look, interest rates are high now, still relatively low historically, but especially comparative to just a few years ago. I mean, history doesn't necessarily repeat itself, but it rhymes pretty close. So you could have the best deal in the world right here.
Yeah, absolutely. And as you get older, you get more conservative. And if you've built up a sustainable amount of money and you're concerned about a market downturn, capping your opportunity in those last 3 to 4 years of growth before you're actually going to tap that money, why not lean more into the fixed rate so you can do better calculations and know exactly what your worst case outcome is going to be?
Yeah, no, I like that. That's a really cool, unique product. So if they want to find out more about this product, what's the best way for agents to find out more?
They can call us 800-395-1053. That's 800-395-1053. When the voice prompt comes on, hit the number 1, takes you right to the sales desk. We staff our sales desk from 9 a.m. Eastern till 6 p.m. West Coast time, so extended hours to be able to serve and support the agents and advisors. To learn more about the products that we have available, they'll need an illustration. Our team can do that for them as well. And if they need help getting appointed, we can help them get appointed with their IMO and have an opportunity to get them rolling with Legacy Marketing Group.
And they're based in California, right? Petaluma, right?
That is correct.
Petaluma?
Our home office is in Petaluma, but we have our team is spread all over the United States for that reason. So we can provide a broad level of service, East Coast to West Coast time.
That's really cool. That's nice. I remember when I lived in California, I'd call some of the carriers right when they opened. I'm like, oh, that's early. I go, yeah, I know, but I want to be first in line. So yeah. And then the website domain, just so everyone knows that. What's the website to go to?
LegacyNet.com. And that's legacynet, one word.com.
Even to this day, embarrassingly, I type in legacymarketing.net all the time and I get all these, or legacy.com. I get it mixed up. So I wanted you to say it just in case.
Absolutely. Yeah.
But yeah, you could go there. And here's something else that's really cool, that's honorable about what Legacy does with their products and the carriers that they partner with. You can actually access like renewal rate integrity, which is huge.
Now, we publish that on our website, and that's a big deal.
That's
we're
huge.
not always number one when it comes to rates and caps because we don't play the teaser rate game. We want to give value that's going to be consistent over time. Yeah. And that's one of the reasons we publish our renewal rates, and proud to do so.
No, that's amazing. I've hit on that so many times, just telling consumers and also agents, like, look, if you're going to buy a purely design growth product, just because one company might have a cap rate that's 20% higher than everyone else, they're not going to keep it that way, okay? And so you want to be able to access it. If you're going to be selling growth products, or if you're a consumer buying them, you should ask the agent. If you're an agent, you should actually ask the carrier, hey, give me some renewal rate integrity pieces. If they don't want to give it to you, what kind of confidence are you going to have? You don't want to sell somebody a 10-year plan and then they drop rates dramatically in year 3 to 5, and they're still stuck in this thing for another 5 years, because then the illustration is completely irrelevant, right? And we're going to see a lot of illustration changes coming up with NIAC, I feel, in the next year or two, where they're going to look at all this and going with a carrier or a group of carriers, especially through Legacy, where you have access to transparent data. It's going to give you more confidence, because there's not one carrier out there that will have 100% renewal rate integrity for a long period of time, unless it's a guaranteed cap lock that's irrelevant. But most of them are going to be anywhere between 70 and 80%, maybe 90, but that's fair. At least they publish it. Other companies, they won't show you it at all. And generally speaking, after years of doing this, I won't particularly name any one carrier or carriers. However, those that don't publish it, we've sold products before in the past because they happen to be competitive at the time. And we learned quickly, wow, they keep dropping these rates all the way down. So we don't want to be affiliated with that. So in the long term, as a career agent, you want to be cognizant of these carriers and the quality that they're actually providing. And Legacy, even though they don't have their own product, or they're not underwriting it, they're using these bigger carriers, they are handpicking these carriers to make sure that they maintain not only the carrier's reputation, but also their own. And that's another safety measure.
It is a true carrier partnership that we have with our players. Yes.
Yeah, that's awesome. Well, hey, John, thank you so much. Again, we try to keep these 15 to 20 minutes long. We know agents are busy, and you're probably listening to this on like the podcast, or you watching it later at night. So thank you again so much. If you haven't checked out our live event, check it out. Just annuityproducers.com, links in the bio, and I'll put John's contact information down there too. And take a look at Legacy. A lot of times IMOs, FMOs, sub-BGAs, they don't promote certain groups for whatever reason, or they have favorite groups, but you have to be neutral in this industry. At least give them an opportunity. Take a look at it. It could add some huge value to your own career and to your client base. Thank you so much, John. We'll see you next time.
Absolutely. Looking forward to seeing you in a couple of weeks, man.
All right, bud. You too.
Thank you.
All righty.